to my channel. Before I start, don't forget to like, comment, share, and subscribe. Hong Kong returns. Washington and Beijing have reached an agreement allowing U.S. auditors to inspect China-based accountants, the first step in a process that could prevent around 200 Chinese companies being kicked off American stock exchange. Some view market specialists. This is seen as a positive first step. However, things are not fully cast in stone yet. Seen from the various sudden reversals in the past. Can NG Security Strategies China ever break securities Hong Kong? I think if the agreement is finally to be reached, the market sentiment will keep improving, which will support the Hong Kong stock market, especially the technology sector. For the short term, the RSI will keep the upward momentum and may challenge the 21,000 level next week. For the midterm, the recovery progress of the Chinese economy will be the core factor for the stock market. Powell leader Miller and Chevalier, Washington, D.C., former director of the State's Office of International Affairs. Clearly, the Chinese authorities felt the pressure of possible delistings under the Holding Foreign Companies Accountable Act by explicitly tying the ability to maintain a U.S. listing to the PCAOB's ability to conduct inspection of economies. Auditors Congress imposed a cost on China for its long-standing refusal to permit the PCAOB to conduct inspection of U.S. registered accounting firms located in mainland China and later Hong Kong. The real issue is whether the Chinese authorities will now honor the deal and provide the PCAOB unfettered access to the auditor's work papers. For more than a decade, the answer has been no. But now that the threat of delisting is real, it looks like the answer from the Chinese authorities may be different. Washington MA adjunct professor in law school. This is a compliance issue, so the implementation of this framework in the coming months will be the key to the success of this complex cross-border setup. Marcia Ellis, lawyer at Morrison and Foster, Hong Kong. We expect that Chinese headquartered companies with sensitive data that have not yet listed will favor listings in Hong Kong even if the PCAOB issue is resolved. In addition, listing in Hong Kong also insulates companies from what may continue to be a contentious relationship between U.S. and China in the next few years, even the PCAOB issue is resolved. Thomas Hayes, managing member, Great Hill Capital, New York. A long time coming, this has been a huge overhang on Chinese ADRs, causing some of the higher quality business like Alibaba to be mispriced for some time. As the deal moves forward and the fog is lifted, many of the stock will have significant appreciation, not because the business changed. The big tech platforms have weathered the pandemic and crackdown fairly unscathed fundamentally, but because the uncertainty has been removed in inviting investors back to grow. Zhang Zihua, Chief Investment Officer, Beijing Uni Asset Management. Okay guys, that's all from me. Don't forget to like, comment, share, and subscribe. Okay.